Hello, dear students. Let us understand about capital budgeting in this session. Capital budgeting, where budgeting for the long-term assets, that is fixed assets. So for land, building, and machinery, that is that kind of budgeting we plan. We say that as capital budgeting. Okay. So let us discuss this in detail. Yes. So it is the process of selecting and evaluating. See, it is not an easiest task like just like that you cannot do the budgeting. Okay, since it long-term process is involved here, such a huge investment is involved here. So where we need to do some selection uh, process as well as some evaluations we need to do. Okay, of what? Of long-term investment. So pros and pros for investing in a business. So for that, it is not an easiest task. We say that as capital budgeting. And why we are selecting, why we are evaluating, what is the purpose of doing all these things? Obviously, to maximize the investors. Investors is nothing but the shareholder, the actual owner, the real owner who invested for the business. So to increase his wealth, so the entire process is happening. Okay, so that is what we say this process is capital budgeting. Yes. What is this capital investment? Long-term investment, huge investment. What is this? We broadly divide this capital investment into two categories. One is initial cash outlay, another one is inflows. So in simple, we say this is cash outflow, another one is cash inflow. So basically, cash flow can be divided into two types. One is in, another one is out. Okay. So inflows is all the cash flows getting into your business. Whatever you are receiving for your business, we say that as inflows. Outflow or outlay is the initial investment that we do for our business. Okay. So where we say we are just inserting for our business. Okay. That is why we represent this as outlay or outflow. Okay. So both these outlay as well as inflows combined together, we say that as capital budgeting. Okay, so where we'll be analyzing and what to analyze. Okay, so imagine that in front of you there are different projects. Okay, you need to analyze and you need to take the proper project which gives you better return in future. So that analyze part that we need to do here, which gives returns in the sense good return, okay, better return for you, and that return it should match the expectation of the shareholders. Imagine that if your initial cash outlay is 50,000, just an assumption, if it is 50,000, so your return should be more than this 50,000. Say for example, 1 lakh or 1 lakh 50 or 2 lakh. Okay, so that high return that you should take. So that is why we say that this return should match the expectation of shareholders. Clear? So we move on to the next. So this capital budgeting, after evaluating the project proposals, there will be n number of projects. Okay, so you need to evaluate one by one. Yes, which project gives better result. Okay, and you need to select the proposal where that should maximize your return. Ultimate aim is return should maximize. Okay, and this capital budgeting after estimating the post tax estimating, so tax should be deducted after deduction of taxes, and that part should be taken into our calculation, and which that increases your, it should increase your cash flows. Okay, and for each projects we need to check our cash flows inputs. So this is another way. And coming to the importance of capital budgeting. So first one is substantial expenditure. See, huge investment that we need to do, that is actually called as capital budgeting. See, buying a land or building or machinery, it is not an amount or fund that you cannot spend easily. Okay, So where huge fund is required for getting into this process, doing the business or do and expanding the business. Okay, so substantial expenditure is included in this capital budget. Next is long-term play. So from the beginning, we are discussing the same long-term assets. It is for long-term assets, for fixed one. That is why, yes, obviously it is for long-term period. Capital budgeting, it is for long-term. Okay. And irreversible. Once if you invested into a land or a building or machinery, you cannot get back. No, I don't want this. I need to get back my, cash back. It is not possible. It is irreversible. Once you invested, yes, it is fixed. Okay. And next is complex. Crores and crores of amount fund is involved in this capital budgeting. So after proper evaluation, you need to analyze, you need to evaluate. There are many processes included in this capital budgeting. So that is why we say this as complex process. It is not an easy process, very difficult. But the result, it gives more return for you if you select the proper project. So obviously you'll get the better. Okay. So this is all about capital budgeting. Thank you.